welcome. I invite you to stay and listen to how self-employed Canadians buy their first home mini-series. In this part 2 of part 4 mini-series on how to attain a mortgage so that you can buy a house as a self-employed person, you might have heard as a self-employed person that it's hard to get a mortgage. I'm here to tell you, you might have been looking in the wrong area. Last week, I talked about the general struggles and some of the myths some people have about getting a mortgage if you're self-employed. This week, I'm going to talk about some lender options and what options might look like if you're self-employed. I'll give you a hint. You have more options than you think. And I'm going to discuss when and why about some of these options. The following week, we're going to take a deep dive into income and what kind of income you might use if you're self-employed. There's lots to talk about, and I'm going to end the series, part 4, tying it all together. If you are self-employed and you're trying to buy your first home, buckle up, my friend. There's going to be lots of information coming your way. Before I get into that, let me just take a brief moment to introduce myself. My name is Juanita. I help people find money so that they can finance their dream. Maybe that dream is buying their first home or leveraging their equity so they can make their other dreams reality. I'm an Ontario mortgage agent with Bricks Mortgages. It's a great supporting brokerage. They're actually one of the fastest growing brokerages in Canada. As a brokerage-based mortgage agent, I have access to many lenders, which means I have access to banks, credit unions, financial institutions, alternative lenders, B lenders, and private lenders. I'm a founder of Building My Wealth website and podcast, a resource of various financial industry professionals and experts dedicated on providing you with valuable information how you can build your wealth. I'm also the founder of Wealth Building Divas, a ladies-only professional networking group in Ontario. And if that wasn't enough, I'm also a mom, avid reader, working on becoming a published author, crafter, and I love books and dogs. I love dogs. For today, I'm going to focus on lenders and we're going to go beyond the bank. The problem is a lot of people think that using a bank is the only way to borrow money and that banks are all the same. With this narrow view of lenders, it becomes a real issue for self-employed people. Can't seem to get a bank loan to buy a house. Before I get into all the different kinds of lenders that we want to look at, I would like to propose that you start viewing mortgage lenders differently. Have you gone grocery shopping lately? Think about that grocery store you went to. What did you buy there? Did you buy some particular items at a particular grocery store? Could you have purchased that same item at another one? There's a lot of varieties out there, wouldn't you agree? You've got the popular grocery stores where you can buy freshest and most convenient, top of the line, health conscious food stuff there. There's the farmers market, health food stores. You've got the basic grocery stores that are geared to the money-saving clientele. You've got the big box stores. Without actually naming some of these stores, you get it. There's lots of choices out there. And you have your reasons why you go or don't go to each type of these stores, right? But would you agree that they all sell something that's considered food? I want you to start thinking of lenders like that. There's a wide variety of lenders out there. What are these lenders? So you have your banks, right? Even among the banks, they're not all the same. There's differences among the different banks, and each one caters to a different type of clientele. All banks are going to lend in what's referred to as that prime lending space, where they're able to offer low interest rates and mortgage features such as being able to pay off your mortgage faster. There's lots of ways to save money when borrowing in that prime lending space. Credit unions are similar to banks in that they lend in the prime lending space. I find credit unions tend to have a little bit more common sense approach to things. Next, you have your financial institutions. Some of these lenders are also insurance companies. Well, some of these lenders, their sole business is mortgage lending. I don't want to get into deep about the differences and variety among these types. However, I would like to point out the nice thing about staying in that prime lending space as a customer is that there's lower fees involved and you have access to lower rates. Most of these prime lenders like to deal with the average person who has good credit. Most of these types of lenders that I've talked about so far, they're going to have an alternative lending part to them. Let me explain. Some of these big name lenders have both prime and alternative lending. Maybe it's part of their branding that they're able to offer both. Maybe it's done with two different departments within the same company. Or maybe you don't know it because they have two separately named companies and you had no idea were somehow connected. I'm letting you know because I feel this adds to all the confusion. So let me get into alternative lending. If you're thinking the phrase alternative lending, sounds very broad. It is. And when used in a sentence, it is used very generally, meaning anything that is not prime and short of being purely private. And I've heard others use it to include private lending. I think we can all agree that it's not prime lending, right? Now, private lending isn't going to be your long term solution to buying your next home. Private lending has the highest interest rate, highest fees, and short term. Private lending is great for short term patches or for fixes. They're great when you have a good reason to use them and you have a clear path on completing your short term. They're often used as a short term patch or a fix to something, or a stepping stone in your long term goals. So let's get back to the not so private alternative lending. This is a space where a number of self employed people may eventually find themselves in. There are going to be fees involved, which are in the range of 1% to 2%. The more private, the higher the fees. Of course, your mortgage agent is going to try to place you with a lender who has lower fees because a good mortgage agent is going to do what's best for their client, which is you, right? Generally speaking, interest rates are going to be higher. How much higher though? Well, that's where that statement, it really depends on you, comes in. If you think about a grading scale, where one end of the grading scale, the lender looks and feels like a prime lender. And at the other end, you have the other side where they look more like a private lender. So the one that looks more like a prime lender, their interest rates are going to be lower, their broker and lender fees are going to be lower as compared to other alternative lenders, where the more private looking alternative lender is going to have higher fees, higher broker and lender fees, and higher interest rates as compared to other alternative lenders. For those who can't or choose not to use a prime lender, your goal is always going to be to improve your financial situation so that you can use lenders who look and feel more like prime lenders. I did say choose. I bet you're thinking, why would anyone choose an alternative lender? Let me give you an example. Let's say in your business, you have a choice between paying yourself with pay stubs, where you get a T4 at the end of the year, or paying yourself in dividends. You'd rather pay yourself in dividends, but you feel you have to pay yourself in pay stubs so you can qualify for a mortgage when you need to. This is when you need to talk to a mortgage agent and your accountant and ask yourself the following question, or at least get an answer to it anyway. What is the cost difference over 5 years between paying alternative lending fees versus paying income tax every year over that same period of time? You might be surprised with the answer. This is where talking to a brokerage-based mortgage agent might be worth your time. Don't speak to someone who's not a mortgage agent. Don't seek mortgage advice from your friends, your family, your coworkers, or your neighbors down the street unless they are a licensed mortgage agent. Chances are their information is going to be out of date, complete hearsay, really only applicable to their situation. And remember, everyone's situation is going to be unique. And if you're self-employed, I would also recommend you speak to a level 2 mortgage agent who are able to speak to you about both prime and alternative lenders. A level 1 and level 2 designation are somewhat new. That was brought in by FSRA, the Financial Service Regulatory Authority of Ontario. Level 1 mortgage agents can assist you with lenders who are approved by the Canadian Mortgage and Housing Corporation, CMHC, under the National Housing Act, while Level 2 mortgage agent can assist you with those lenders, plus all the other lenders like alternative lenders and private lenders. My main point is that you need to keep your options open for the possibilities, what other possibilities are out there. Don't discount a lender just because they're not a bank and they charge fees. And that was my whole point. Thank you for listening. I hope you learned something new that was helpful to you. I invite you to come back next week. I'm going to do a deep dive into income and what some of the options are for those who are self-employed. And with a follow-up next week with a part 4, I'm going to try to tie it all together in answering the question, how self-employed Canadians buy their first home mini-series. Thank you for listening. Have a wonderful day, and we'll talk soon.